We're all familiar with the three whats: what it is, what it can do for me, and what does it cost. Tyler Riekena, Country Financial, can help you find the answers with insurance coverage to help protect what's most important to you, all at a price you can afford. So while you're juggling work and kids while trying to keep an eye on your financial future, Tyler Riekena, Country Financial will make sure they are the first ones there when you need them most. Many young parents leave pages of instructions for the sitter when they have their first date night after the baby is born. But only 36% of parents with minor children in the U.S. have any sort of plan to protect their children if they don't come back. Don't be part of that 64% without planning. At the Wilson Law Group, located in Madison, estate planning is all we do.
Fostering deeper relationships, influencing behavior change, developing resilience. You're about to start winning. Here is your host, Christine Bright.
Welcome to Parenting Game. I am so glad you are here. Today I am with Tyler Riekena from Country Financial, and we're going to be doing a little Insurance 101. Now, what we are sharing today is for informational purposes only, so please consult a financial professional before you make any decisions. Tyler, thank you for joining me today. Before we dig in, share a little bit about yourself, how long you've been in the financial business, and a little bit about your family.
Sure, yep. Thanks for having me. My name is Tyler Riekena. I'm with Country Financial. My wife, Courtney, and I, who's with us today, we've been married for 9 years now. We live in the Sun Prairie area. We've got 2 young children, Lily, who is 6, and Jordan, who's 4.5.
Nice. And then tell us about the financial piece. How did you all get involved in that?
Sure. I've been with Country Financial for about 8 years. Prior to that, I was a restaurant owner. That's what I did out of college. Ran that business for quite a while, learned a lot, but just didn't have the passion that I was looking for. And my whole background has been in finance. I just decided to make a career change and find something that was a little bit more geared towards my passion and helping people, as opposed to just feeding them sandwiches. So we're feeding their financial goals as opposed to their bellies. But I looked at a lot of different insurance providers and financial advisor firms, but I landed on Country for a number of reasons. One was just the breadth of services that we offer. There's a lot we can do for our clients. Whether it be on the insurance side of things or the asset management side of things. And it's just a very well-rated company. We're an A+ rated company. We've been around for almost 100 years. So it was a good fit for me and my family. And we've been in the Sun Prairie area. My office has been for 8 years now.
Oh, that is wonderful. Well, one of the reasons I reached out to you to do this episode is I've had friends who have really suffered from not insuring their children. Now, this is just going to be a piece of what we talk about today. We're going to be a little bit comprehensive with the overview. But what was really heartbreaking, I had one friend who lost her son, and not only are they dealing with the loss, they're dealing with how are we going to afford, to bury our child. I have another friend who just recently realized that because of the diagnosis that her son received, he is now uninsurable, and they're trying to figure out how to navigate that. And when, parents, when you first are getting those little ones, it's kind of like a yucky feeling to think about what if something happens. Yet it's really an important piece and can be financially devastating if you don't. But we're not going to start right there. You are going to kind of share with us an overview of what life insurance is out there and how each of those different policies can work. So I'm going to let you just start digging in. What are we going to share first?
Sure. And what you mentioned there is unfortunately a common reason that people will ask these questions. They've had a personal experience that kind of makes it real. Insurance it's really just a piece of paper until it actually affects your life. And then when people have those personal experiences, that often spurs on conversations and questions and action. So,
absolutely.
Yeah. So high level, I mean, life insurance is a very important part of what we do. It's one of the foundational pieces to a financial plan. At Country, we work on the planning and the protection, as well as the growth planning as well. But life insurance, on its its most basic form, is basically made to help ease the financial burden that someone's passing would incur. So we help parents with children develop plans and analyze their needs and get something in place for them that's going to offer them the protection they need.
So there's different types of policies out there. Whole life, term. I've been a little bit out of the loop, so there may be some other products out there. So can you share with us those different types of products?
Absolutely. So how life insurance works is pretty simple, and it's pretty consistent across any product. Basically, you would select a death benefit that you would need for yourself or for your child. And then you'd get a policy with that death benefit amount, and you can structure it in many different ways. And you mentioned term insurance, whole life, universal life are all probably the most popular three types that's out there. They are the same in that if the policy is still in force, the death benefit upon the passing of the person still gets paid. It's generally a tax-free benefit, which sometimes people forget about. It's not taxable if structured properly. But they are different in how they operate. A term insurance policy is generally a good fit for young parents on a budget because it allows you to get the maximum amount of coverage at the lowest cost. It is pure insurance, meaning that if you don't use it, you lose it, which I would always tell people, hey, that's a good thing. You won, right?
Yeah,
you didn't pass away. But there is really no intrinsic value to the policy. It's an agreement with the insurance company that's good for 10, 15, 20, or 30 years. Once that term expires, basically, you have to go get new coverage if you wanted more. And a whole life product works similarly. Again, if it's in force, it pays the death benefit. But it does have a cash value component. So there's a savings part of it too. It's also guaranteed for life as long as premium payments are made. So, if you have a desire for your coverage to last more than just 30 years, oftentimes a whole life product is the way to go. And again, that savings component actually creates a tangible value of the policy itself that you can use for, retirement supplementation, for, helping put your kids through college, buying a car, buying a boat. There's really no limitations on what you can use that cash value for inside of the plan.
Okay, college or a boat.
Right.
I think I know which way I go on that.
Yep.
And then was there any other policies or other options?
Sure. So there are, universal life policies, which are a little bit more complex, so I won't get into the details of it, but it's basically a permanent life insurance policy that has potentially flexible premiums, so it allows you to pay a little bit more, pay a little bit less, within the rules of the contract. And it can allow for some potential growth inside of the policy that's market-based. Just depends on what product you use. So it's a little bit more complex. That's, again, the overlying theme here is consult with a financial professional because everybody's needs are different. You might hear your neighbor or your coworker say, well, term insurance is the best. And for them, it absolutely might be the best.
Yeah.
But, for you in your unique situation, it might not be the best. So you want to talk with a professional that's I would call it product agnostic, somebody that's not sold on one way or the other, because really it does depend on the person and what they're trying to accomplish.
Absolutely. So I have an experience. I realized this is something, life insurance is something I need to put in place. I come to you and how much do I get? And what are next steps? So what happens when somebody comes into your office with that question?
Sure. So kind of reasons people would come in. For example, parents are a prime candidate, I guess I would say. I always tell people if you have a debt, if you owe someone or you love someone, those are two reasons to get life insurance. So if you have a mortgage, if you have kids, you're financially responsible for them. If something happens to you, how are they going to get by? And that's usually what kind of hopefully encourages them to come have the conversations. A lot of times it's us, kind of saying, hey, remember we talked about this last time? Yeah. Because as you mentioned before, it's not always the most comfortable conversation. You know,
Yeah.
nobody wants to talk about their own death and their own mortality, but the fact of the matter is that's one constant thing that it's an inevitability. It's just a matter of when, and you know, it's priced accordingly. So if you're young and you're healthy, it's not very expensive, and it can give people good peace of mind knowing that, hey, if I don't make it home tomorrow, you know, my family, hopefully they'll miss me, but financially they'll be
Yeah.
okay. And, you know, for us, you know, my wife and I, you know, our priorities, you know, are to help them with certain things like college, et cetera. If we're not around to earn an income and contribute to those plans, that plan stops. So it's not just, you know, replacing, you know, paying off the mortgage or paying off your debt. It's, you know, funding those goals and making sure those goals at least outlive me.
Yeah, I like that perspective, because as I said, we often do this internal thing of, you know, I don't want to think about that I may not be here. But when you do that little flip of, you know, like, this is a gift, you know, this is to make sure that everybody is okay. Probably won't happen, but if it does, then everybody is taken care of.
Right, and I use a lot of analogies when talking about life insurance. Part of it is, you know, some of it's humor just to kind of lighten the situation, but some of it's kind of, you know, making it more relatable, because again, nobody wants to think about their own mortality, but, you know, people wouldn't dream of canceling their home insurance, right? I mean, if you had a fire, oh my gosh. But in reality, worst case scenario, if you lose your house, that would be terrible, and I would never advise people to cancel their home insurance for obvious reasons. But financially, you could recover, right? You're still around, you can still earn an income. It would be tough, it's not ideal, but you could still do it. You know, if your income is just gone forever, your family is not going to be able to live the life that they had been doing. And another great analogy I always use is if you had a machine in your basement and that machine printed $5,000 a month, and you would just go down and grab the money and thanks machine, keep working, would you insure that machine? And I would.
Yeah,
you know, if there was a warranty program. I mean, you go to Best Buy and they ask you if you want to do a warranty on a TV. Well, that machine I would definitely take a warranty on. And in reality, you are that machine. I mean, we're people, we're not machines, but the income that we produce is a real thing. And insuring yourself makes a lot of sense for that reason.
Okay, that is a really good analogy. I wish I would have heard that sooner, because I probably would have planned life insurance a little bit sooner. So that is really, really good, really helpful.
Yep, and then there's also the question of, you know, not all parents or spouses are income earners, right? Maybe they are stay-at-home parents, or, you know, just they don't work outside the household. So sometimes there's the misconception of, well, you know, I don't earn an income, why would I need life insurance? Well, you know, could you imagine what it would cost to replace everything you do every day if you were to monetize that and, you know, hire somebody to, you know, get the kids up and get them ready for school and, you know, go grocery shopping and do all of those things. And obviously I'm just using one scenario. I'm not trying to stereotype it, but non-income earners bring a huge value to the household. Or just the example of, you know, if you're down to one parent, would that parent be able to travel for work or do the things that they do in their job? No, they wouldn't. At least they'd be limited. So, you know, people have to factor that into account too. It's not always the same amount that we put on each spouse for various reasons, but it's definitely a shame sometimes when we see people not prioritizing that non-income spouse as far as making sure they're covered too.
Yeah. Well, I was a nanny in a former life, so I can put a number on what that costs to have somebody do all that.
Right.
And you don't think about it. It's like, oh, well, you know, say you were working full time, what would be the cost to hire somebody to come in and do all this? And it's a pretty big number.
Yeah, absolutely.
It's a pretty big number.
And then, you know, there's also the question of, you know, I have coverage through work. And, you know, I hate to give general advice to a specific scenario. It's something I try to stay away from, but some stuff is pretty good universal advice. And that would be to take advantage of what you have through work. Usually, you know, employers are trying to attract employees now with the great resignation or whatever they're calling it. You know, employers are trying to find people to work. So they're providing these benefits, and a lot of times it includes life insurance, which is great. You should take it. It's usually very low cost. But one of the downsides is it's usually limited to 1 to 2 years of income, which might sound like a lot. If you say, oh, I got a check for $100,000. Okay, but you're going to work for 30 years.
Yeah.
You know, how much are you going to make between now and the time you retire? And
Absolutely. Absolutely.
Not that you need to replace all of that, but that's a more realistic number of the income potential you're losing versus just a year or two of salary. And then also work-based plans are not guaranteed. They are a benefit that's offered by the employer. So, if you drop your hours, for example, sometimes you lose some of the benefits if you're not full-time, or if they decide to stop offering it entirely, or if you change jobs, either voluntarily or involuntarily. We encourage people not to rely solely on that for their coverage. I can't tell you how many times people say, I have it through work. Okay, but what happens if you don't work there anymore? Or what happens if your company gets merged and the new plan doesn't offer you life insurance? And if they're in a situation like your friend and they had some sort of diagnosis that doesn't allow them to get coverage at that time, they're SOL. So we certainly encourage people, again, generally, to make sure that they've got something outside of work that's personally owned, regardless of what type it is, just so they have a base amount of coverage no matter what.
Wonderful. Well, I know that you have a sheet that you're going to share with us today. Again, going back to that question, how do I figure out what I need? Can you walk us through that?
Absolutely. I'd be happy to. This is a sheet that we use because that's really the $1 million question, no pun intended, of, okay, that makes sense, right? I understand that life insurance is important. I want to protect my family, but how much do I need, right? Do I need $1 million? Do I need 100,000? I don't know. So we have this very helpful sheet that we go through with our clients, and it's not a hard and fast rule says this is how much you have to get. It's more of a conversational thing. I often joke with my clients, okay, did you guys sit and talk about how much life insurance you need over dinner last night? No. Like, okay, well, that's what we're going to do today. And this just kind of high level helps people wrap their head around, what they would want to happen, because sometimes there is a difference between their need, how much they would need to get by, and what they would actually want to have happen. So this, I think, does a good job of helping people realize, it is uncovering their need, but it helps them understand maybe what they actually want to have happen. So it gives a couple categories.
Okay.
We've actually used the acronym of DIME because it's money based, but it really does highlight 4 specific categories that a lot of people want to address as part of their life insurance plan. D is for debt, and for that category we're focusing on short-term existing debt. So if you have credit cards or student loan debt or a car loan that you don't want to pass that along to your spouse and your family, that's where we would categorize debt. And then we would also include final expenses in that category. As you mentioned, your friends, there is a cost, unfortunately, to burying somebody. And, it's bad enough that your family has to go through that. You probably don't want them scraping together money or setting up a GoFundMe account to pay for a funeral.
Yeah, and even if recently with my mother, we set up a funeral trust because the insurance money is getting posted out to 4 different children. And I said, I don't think any of us want to have to go back and, ask, for that. So it is nice when you specify that, that this is, how much is going to go for those final expenses.
Yep. And then the next section we have there is for income replacement. So again, we talked about earlier, if that income stops, how does your family get by? Yes, we can cancel out your debt, we can pay things off, but your family still needs money to live. Property taxes are still there, cell phone, car payments, they still need a vehicle, groceries, you name it, right? People often want to replace a portion of their income for a set amount of time. Now that's where it kind of gets into the want versus the need, because everybody's different. Some people say, I think after 5 years, he'll be fine. So that's what I want to do. Some people say, well, our youngest child is 2. I want to make sure they're at least 20. So we're going to set that income need for 18 years. So they'll take whatever amount of income they want to replace, they'll multiply it by 18 years, and that's the amount they'll put for the income to replace. And then you'll notice there's 2 columns there. Spouses, so it doesn't have, if it's just one person, we just do one, but these numbers do not have to be the same. As I mentioned before, it is an individualized thing. Some couples just like the parity, say, well, I don't want you to have more than me, that sort of thing. But it's not uncommon to have different amounts for spouses.
Okay.
So And then the next category is mortgage. Most people carry a mortgage. Obviously, that's can be a pretty large financial commitment. Wisconsin is a community or marital property state, meaning that all debt and assets are essentially shared once you're married. So that mortgage doesn't get half forgiven when you pass away. So often people want to take care of the mortgage. And if they do, then that's what we'd fill out in that category. And then the last category is for education costs. I say education, et cetera, because it's kind of a catch-all. This would be if you have goals to help your children through college, as we touched on the previous segment. You can earmark some funds to help them pay for college. Or if you have philanthropic goals, if you want to, donate to your church or your nonprofit or your favorite TV show, if you wanted to help them out upon your passing, that's kind of a catch-all category. And then we add that all up and we subtract the existing resources, like if you already have coverage, if you've already got a policy, if you have some through work and want to factor that in, take the two, subtract it out, and that's where you arrive at your number.
That's awesome. And that just makes it, it's very palatable with that breakdown, because initially when you like, well, what do I all want paid off? What do I all, and when with that, it's just, wow, it's just really easy to wrap your head around it.
Yep.
and get to that number. That's a really, really great resource.
Yeah.
So as we move on, we started the episode, and I don't want to leave this out as part of my heart for wanting to have you on here and talk about this was the scenarios with friends of mine that have had the child piece that really put them into financial strain, or now they're wondering what to do because their child has been diagnosed and now cannot get life insurance. So can you share with us those pieces as far as how you can insure your child?
Absolutely. It's a very common thing. Some people have had experience. We come across a lot of clients who they've got a policy that their parents took out on when they were a baby. So for them, it's like, oh yeah, that's something that my parents did. That's something that I'd like to do. For some people, it's like I'm speaking Greek. They're like, why would I put an insurance policy on my baby? That doesn't make any sense, because nobody wants to think about that, right? You don't want to. You just had your baby. You don't want to think about that sort of scenario. But it really is threefold as far as the benefits of getting a plan for a child. First and foremost is of course the death benefit. Should something happen to them, there is a policy that's there. The nice part is any policy on a youth is going to be a permanent policy of some sort. Usually we'd go with a whole life product of some sort. And those will have a cash value component. That death benefit will increase over time. And it's locked in forever. So it's something that they can have no matter what. Part of the reason it makes sense to get it while they're young is the cost of life insurance increases as you age. So getting it when they're a baby is the cheapest it's ever going to be.
And then how soon? I mean, is that gave birth, I'm calling Tyler.
Right.
While in the hospital.
So there are some rules. If it's a normal birth and there's no complications, usually within about a week we can actually issue a policy. I do encourage people to do it as soon as possible because things come up. Right, you mentioned another friend that had a diagnosis. Don't wait too long. Things happen. We don't like to think about it, but even if it's something that's not going to be a big deal in the future, life insurance is kind of funny, and life insurance underwriters don't like the unknown. So if there's kind of a question mark out there, they may delay until they're 18. So I encourage people to do it. My wife and I, we got policies on our kids shortly after they were born. Obviously, me doing what I do, it was pretty easy to do, but that's the one benefit is, getting it while they're young, making sure that, you get a good rate. The other important factor is ensuring their future insurability. As you mentioned, as they age, health concerns might pop up. We include what's called a guaranteed insurance option, which most companies will offer. What it does is it's a little rider you purchase. It's about $12 a year on a lot of policies. And it allows them at 8 different times in their life to purchase additional units of coverage. One example I'll use, if you did, for example, a $50,000 policy, they would get 8 chances to buy $50,000 more of coverage in their adult life without having to prove any sort of health.
Oh, wow. That's an important piece.
Yep. So they could take that policy up to $450,000 even if they had health concerns at healthy rates.
And that's all just because a parent did that early on.
Correct.
Wonderful.
And then, the third component is the savings component. As I mentioned, most child policies will be a permanent policy. They'll have a cash value component, and that cash value will grow over time through dividends and will allow them to use that money for college, for their first car, for their, down payment on their house, their business, et cetera. So it's actually an asset. And a lot of times we'll structure it on a limited pay option where you only pay it for 20 years and the contract is fully funded, so that when they get that policy, it's a true gift. It's an asset that's growing, as opposed to a lot of people got a policy that was given to them, but they still have to pay $92 a year or whatever it is. So it's kind of like, oh, thank you, but I also have this bill. So instead of giving them a bill, you're giving them a gift. So that's a very popular structure that we use, is the 20-pay life policy.
That's awesome. And then I've also heard the term like a child rider. Can you explain what that is?
Yep. So a lot of companies will offer that. It'll basically be a term insurance policy on a parent that you can get a child rider that allows, we call them units of coverage, chunks of about 5,000 per unit. And a lot of times it's universal. So if you have 5 kids, that extends to all 5 kids. If you have 1 kid, it extends to that 1 child. And usually you can take that up to about 15 or 20,000 of coverage. Because it's a rider, it's basically part of that other policy. So as long as that policy's in force, that rider's in force, there's no intrinsic benefit. It's if you lose it, if you don't use it, you lose it kind of proposition. But it is something that parents could add to their own term insurance policy. Wonderful.
And is there any other avenues outside of this for insuring your child, or is that kind of all encompassing?
That's pretty much it. I mean, you'll see some stuff on TV, Gerber Life, et cetera. Those are just whole life policies. There are some great companies out there. We're one of them. But if you talk to a professional, they'll show you some options. It can be very budget friendly. If you have the goal of setting aside $20, $30, $40 a month for your child, it's a really great option to consider because of all those reasons.
Wonderful. And so we were talking about life insurance today, but that isn't all that Country Financial offers to families.
Correct.
So can you go ahead and give me the quick overview of what they can all come and see you for?
Absolutely. So we are a full services, insurance and financial services company. So we help people with, home and auto insurance. So if you don't like your agent, or you didn't have a claim that worked out well, or you feel like you're paying too much, we can run comparison quotes. We do small business insurance, which is one of my passions. I love working with fellow business owners. We've got a great list of products there, and oftentimes we're able to give them better coverage and potentially save them money. The life insurance piece, as we touched on today, is very important. That would tie into anything, really, in my opinion. And then we do have a full-service financial services company that helps people plan for retirement, college savings plans, IRAs, et cetera, as well as just complimentary guidance on your existing employer plans.
That's awesome. And the one other thing that you had brought up that I just want to touch on briefly before we wrap up is you at Country Financial are very much a holistic approach. And then you're also willing to partner with others that, to help with things that you don't do, like doing taxes. And can you just real briefly share what that looks like?
Yeah, I mean, we do a lot, but we know our limitations, right? So we have a team approach at our home office where I'm utilizing all of our resources. If it's a specific retirement planning question, I'm going to work with the planning team. If it's business insurance, I'm going to work with our commercial underwriters. If it's a tax-related question, we don't give tax advice. We can't. So that's something I would partner with the local CPA and refer that out. Estate planning attorneys, realtors, mortgage lenders, all of those things, we try to give clients, as much as we can while still sticking to our core competencies, but giving them that sense of, hey, I can go to Tyler and he can help me with all of these things, even if it's outside of his scope.
That's wonderful. Well, thank you for your time today. This is just really valuable information for parents and not the topic that you usually bring up at the dinner table. So I thank you for delving in with us. And as a reminder, we presented a lot of information here today, but you need to contact a financial professional before you make any decisions. And remember, time invested in a child is never wasted.
We're all familiar with the 3 whats: what it is, what it can do for me, and what does it cost. Tyler Riekena, Country Financial, can help you find the answers with insurance coverage to help protect what's most important to you, all at a price you can afford. So while you're juggling work and kids while trying to keep an eye on your financial future, Tyler Riekena and Country Financial will make sure they are the first ones there when you need them most. Many young parents leave pages of instructions for the sitter when they have their first date night after the baby is born. But only 36% of parents with minor children in the U.S. have any sort of plan to protect their children if they don't come back. Don't be part of that 64% without planning. At the Wilson Law Group, located in Madison, estate planning is all we do.
Thank you for watching The Parenting Game. All episodes of The Parenting Game are available on demand at sunprairiemediacenter.com.